catching up with Mike Zuzolo.
Chad Moyer with you on the Rural Radio Network. It is time to take a little bit of a deep dive into the trade so far on a Monday. And, of course, joining us, it's Mike Zuzolo from Global Commodity Analytics. Well, Mike, coming off of a holiday and coming off of the cattle on feed report that we had just before Thursday, first of all, kind of your thoughts for the crop guys. I think everybody's kind of wondering what happened to the rain, huh?
Yeah, and I think this market is underpinned by the fact that we didn't get hardly any rain for the Western Corn Belt and for the hard red wheat belt. But the weather models continue to suggest that big rain's coming. And so the trade continues to stretch itself out farther, I think, Chad, especially in the wheat market, with it making some new lows and soft red now down 7.5, 8, and the hard red down around 7 cents as well, and back towards that 5.50 area in the May hard red. They continue to bet on the rains coming, and I think that's where at some point, and maybe it's after today's crop progress reports, which we did get weekly export inspections, and are going to get crop progress numbers even with the 3-day holiday weekend. Maybe after that comes out, the trade will start to reflect on whether we're getting enough rains finally. But right now, we can say that I think that the trade is underpinned by the disappointing rains over the weekend, underpinned also by the new 3-year lows in the U.S. dollar. But we're not getting any traction, and buyers are not coming in on market breaks here at midday. Instead, it looks to me like they're actually coming in and selling, minute or small market rallies.
Any thoughts? Were there any interesting numbers in the weekly numbers this morning?
No, I looked at them. They're holding up. I wouldn't say they're great, but they're holding up, and I think that's what we need right now. I think coming off the weekly export sales last week, corn continues to outshine everything else, but the soybeans are not doing that bad at all right now, given the thought that we're going to lose a lot of demand real soon from China. It's the product markets that I think continue to concern me, especially the meal product market when it comes to the soy complex. And we're trading that May meal back down to that 293 level and testing the lows on the day as we speak here.
All right. What are your thoughts? Where do you think planting progress is going to be when it comes out this afternoon?
Boy, I think that we were probably going to show up maybe 5 points too light versus last week, maybe 3 to 5 points too light versus last week in the Western Corn Belt. I think the trade will really be looking at Nebraska, Kansas, South Dakota, and it'll also be looking very aggressively, I think, at Tennessee, Kentucky, Ohio, Indiana for how slow the progress is. And I think that's probably the key states to watch is, did the extra wet weather in the east really slow us down last week? Did the extra dry weather make up for that, or more than make up for that in the west, so that the national average keeps on pace with last year?
All right. Just quickly, you mentioned a 3-year low in the dollar. Is that significant to what degree for the grains?
It's very significant, especially as the gold continues to make new record highs. I say that because I think that if the gold keeps going higher and the dollar keeps going lower, commodities overall will be sought after as a safe haven and as an stagflation hedge. It's when the gold starts to give out that I think I'll start worrying. So that's where I'm at with the dollar. Keep it going lower. That keeps our products cheaper to export, and it does the heavy lifting of the tariffs at this point.
All right. As always, great information. Thank you so much, Mike Zuzolo, Global Commodity Analytics. Check out his website, globalcom with 2 M's, research.com. You can get a 2-week free trial there. Just mention the Rural Radio Network. Do remember, trading of commodity futures and options does involve substantial risk of loss, might not be suitable for all investors. This is the Rural Radio Network.